Hey guys, Boris. Welcome to the commodity dollar update for October 24th to October 28th on the technicals for Aussie dollar, dollar CAD, Kiwi dollar. I think the story this week was kind of interesting. The one thing that we definitely were pretty good in calling was the turn in the Aussie. The disappointment in the employment numbers, I think, took a lot of the Aussie bulls out of the contention at this point. I think it's very unlikely that Aussie breaks the 77 to the upside unless we have some very, very serious dollar weakness. So in other words, my point of view is that if U.S. data stays more or less as expected, I think the move in the Aussie now is going to clearly go to the downside. The very big thing we have on the agenda this week is the CPI data. Unless the CPI data comes in super hot, which is very unlikely, the pressure becomes on the RBA to actually consider easing once again. Because if you have cooler inflation data with worse labor conditions, it really opens up the possibility of yet another rate cut by the RBA, which is something the market has completely not anticipated and not even factored in at this point. So I think Aussie really looks to me as a return back to the range lows at this point. Similarly, CAD. So interesting story with CAD. Really strong labor data the week before, but this week, big disappointment on inflation, big disappointment on retail sales, but perhaps the single biggest disappointment, if you're a bull on the loonie, was the commentary from Governor Polos, who was much more dovish than the market thought. Basically, the market, Polos said that there was a structural slowdown in the economy, that they were perfectly positioned essentially for lower growth. They marked their growth lower going forward. And oil prices just did not lift up any higher than the $50 a barrel level. I think in some ways maybe CAD is a little bit overdone, but it still has potential to go to the upside. I mean, I think you have to trust the technicals at this point. The fact that we took out the 133s this week suggests that there's a very strong possibility we have another week possibly of further CAD weakness, especially, and this is the key thing, if oil starts to kind of roll over to the downside for technical reasons or for whatever reasons, it really opens up the way for a dollar CAD move to the upside. And one of my more interesting ideas this week is sort of the CAD weakness continues against the other COM dollars. The Kiwi, relatively steady and showing some relative strength this week. Our call last week to short Aussie Kiwi was very good because the Kiwi, as I mentioned, did stay much steadier against the Aussie than the Aussie did itself. But there really is nothing on the calendar. I think we have trade balance data out of New Zealand, nothing really going on. So it's really a pretty quiet week this week for commodities. There's no data on Canada. There's no data of any significance in New Zealand. It's really the CPI data out of Australia that's really going to be driving the trade in the commodity dollars on a fundamental basis. And of course, all of that is going to be offset against the story in the U.S. and U.S. yields. But it does feel like the COM dollars are certainly under assault at this point, and there's probably some more weakness as we continue. So taking a look at the ranges, Aussie still 77 to the upside. I mean, if you look at 77.50, if you really want to stretch it out, 75 is the support to the downside, which I think could very well be tested this week, especially on weak CPI data. CAD now moves up to 134. And ultimately, if you're a super bull, and I've been a just sort of a consistent buy to dip trader in dollar CAD ever since we started doing this in the summertime, you could get very bullish and project 135, but I think 134 is sort of the more reasonable target this week of where CAD could go. And Kiwi holding steady 70-73 sort of I think is the range for the trade with a slight upside bias for the Kiwi for the time being. Let's take a look at the charts here and just see how everything sets up. So let's look at the Aussie first, of course. And this was the big turn off the employment data that then broke down all the way down to the 76s. We tested 76s. 75.50 is the next support level. 75 is the key support. And then, of course, the true big support comes in at 74.50. Now, if it gets down there, that becomes probably a bargain hunting buy because certainly you get a triple bottom support here. And I think at very minimum, you get a small bounce here. But a weaker PPI could definitely slice us all the way down to 7,500, 100 points to the downside quite easily. So I would not be looking to buy to get in front of that move here. I think Aussie, if anything, is a sort of a sell the rally kind of a trade here because technically and fundamentally it feels like it exhausted its upside move, and the move now is much more distributive than it is consolidative, both on the charts and I think fundamentally. Dollar CAD did this nice break. I mean, you can like the Canadian economy, you can love Justin Trudeau, but the technicals kind of don't lie. We broke out the 133s, And that means that very likely we extend here to 134s here. Now, CAD is a notoriously spiky little trade, very, very tough to trade, and is the fake out of all fake outs as far as trades go. But still, I think at this point, at very minimum, you have to prepare yourself to buy the dips here on dollar CAD. And if you're just willing to get very aggressive, you can buy this break and try to target 34 on the move. 32 is the support, and ultimately the true support here is 130 So if you are buying the break, you're very, very obviously overextended if you're wrong. But the power is very much to the upside here. Canadian dollars does seem to be under assault, and any positive U.S. data is, if we have strong GDP data this week, it's very likely we take out 134s in dollar CAD for sure. And then last but not least, here's the Kiwi. The Kiwi, obviously also coming down under some pressure, as did all the other COM dollars. But 72 was 72, which was the former support, became current resistance, no doubt about it. And now 70 becomes the really big support. It's actually 70.50 if you want to be more academic about it. 70.100 is definitely a very, very strong support. I like the Kiwi on a relative basis. I'm going to talk about this in the crosses section. I think Kiwi has the least amount of downside action at this point. So if you're going to buy the COM dollars, if you're going to buy the dips in the COM dollars, probably 71 in the Kiwi would be a pretty decent place to begin. If it holds here, it generally actually looks relatively positive because you have a series of higher lows here with a potential move back up. Remember, Kiwi is the only one that has the highest yield in the land. The economy is still quite good, and it is not nearly as vulnerable to China as Australia is, because people have to eat food and people have to buy milk, whereas they don't have to buy steel. And that seems to be the story of why the Kiwi is better than the Aussie at this point. So that's how the commodity dollars shape up at this point. Kiwi, the best on a relative basis. CAD pushing out to 134. And Aussie, sell the rallies because I think it made a top at this point, and we're moving to the downward part of the range. Wish you guys the best of luck, the best of trading. Boris, over and out.